the je ne sais quoi that Apple lost. Many people feeling they'd taken too much out of their new products, the new iPhone, the updated MacBook Pro, and instead just it was a bit lackluster.
I think what you're really seeing is, the step change that happens with new technology is the introduction of that technology. There was no bigger change in the iPhone than before there was an iPhone, and there was. And everyone after that was sort of iterative in its changes. Maybe they get better, maybe they get simpler. You could say the same thing about the Mac. The Mac's actually done well relative to the rest of the PC industry. The problem is the PC industry is in the tank. But the iPad has struggled as well. The watch has been a very big success, but compared to Apple's other products, it's hardly a blip on the map. I think, therefore, this year of contraction has been a very big difference for Apple. You've seen an 8% contraction in top line in the sales. You've seen a 14% contraction in operating profits. Yeah. And so it really is a different feel for that company that they haven't really seen in a decade.
So there's the negatives, there's some of the concerns, but Ben, you're pretty optimistic.
Yeah, I mean, I think there's a couple things that's changed. As Cory pointed out, we're moving to a replacement cycle market, right? And we went through this with the PC, and when we did a lot of PC analysis, we had to sort of understand how long people keep their devices and when they might upgrade. And that same analysis is coming now to smartphones and Apple in particular, where you're looking at them saying, okay, what year might be the big year that a big portion of their base upgrades? And I think a lot of people have those signs pointing into 2017, particularly because of China. Sales have been really slow in China. A lot of that is just Chinese consumers holding onto their phones for a really long time because they're just waiting for the right time. I mean, when they're going to spend out-of-pocket money, upwards of $1,000, that's a lot of money, and so they're not going to do that every year. They're not even going to do that every 2 years. And so we think a lot of signs are pointing into this next year. But the challenge has been, to Cory's point, versus a growth cycle versus where it is when it's a replacement cycle. And the analysis of that market is just very, very different.
And this is sort of analysis that you dig into for many a company. I've got a great chart, and Cory, I know you're a man who loves a good chart too from the Bloomberg, sure. And this is all about showing, look, the Apple share price has been on a bit of a stellar rally since the middle of the year. Up goes the white line. In the blue line, though, number of institutional investors. The big institutional investors, the big funds have been getting out of this stock. It's more retail investors. Are we likely to start to see a change of tune? What is it that investors are saying we want to see from Apple? Is it a killer product, a new iteration?
Well, I think it's really about growth. I mean, momentum investors like growth. They like growth in the stock price, maybe even more than the underlying business. I think that's a fool's errand to try to chase after stocks like that.
But is this a growth stock anymore, or should we stop looking at it like that and start thinking this is a dividend stock?
Right now, it's not a growth business, right? Right now, it's a business that is in contraction. Now, the expectations are that contraction will end. But, to the point that Creative Strategies has pointed out so well, is that the change in the business, we've gone from it being a one-product company in the Mac to a two-product company in the Mac and the iPhone to a three-product company in the Mac, the iPhone, and the tablet.